Today, folks, we got to talk about these AI generated videos. Is it leading into a bubble in the chip sector? We got to broad view my portfolio now hitting $222,000 with the stocks I'm buying, the stocks I'm selling. We got to talk about Tesla. We got to talk about Google and the broader market as a whole. If you are on a path to financial independence to perhaps one day retire early like I am, join my damn journey by going down there, hitting that subscribe button and that like button if you do appreciate these conversations. As always, taking a broad view this week of the S&P 500, it looks like the lower half of the market is finally catching up with the upper half. As tech stocks have been selling off broadly this week, the lower half has been making up the difference, continuing to propel the S&P 500 to continual highs. I do think this is largely unsustainable. I mean, you take a look at the year-to-date chart, and we are up 6.2%. We are a month and a half into the year, and it looks like the market just keeps wanting to go up 5% month after month. But I promise you, this is largely going to be unsustainable. But for now, we can appreciate the gains and continue to cost average waiting for those dips. Hopefully, we're going to have some cash on the sidelines so we can pick up some of the dips when they do happen. If we take a look at the TSX, however, this is doing just as well, which is impressive. It's kind of following suit with the S&P. The lower half of the market is rallying nicely this week. We saw Manulife, we talked about yesterday, crushing it up 9%. A lot of the insurance companies crushing it this week. The banks are coming back. Hell, the energy stocks are coming back. I mean, look at CNQ's up 4%, and the only thing getting hit, just like the US market, is tech stocks, which over a week ago when tech stocks were crushing it and the bottom half was getting destroyed, it's kind of just inverting now, which is, again, kind of adding some more fair value to the broader market, which I think is deserved because there's a lot of discounts in those dividend stocks. So taking that broad view of my $222,000 portfolio as it stands today, I am benefiting greatly because, again, most of my money's in the S&P. I'm not benefiting from Google pulling back this week, which we will discuss, being one of the heaviest hit tech companies on the S&P 500. We can see here is down 5%, whereas Tesla's kind of coming back. And we'll talk about my Tesla position here because in the individual accounts, that's where I've been moving some things around that we should discuss. First and foremost, in my tax-free savings account that I'm trying to rebuild back with the $170,000 worth of room I currently have after that real estate purchase, I really only bought VOO as the biggest position, which is proving to be the most stable because, as you recall, last week Google was up a lot, Tesla was flat. Now Tesla's up almost 10%, and now I'm almost flat on my Google position, but still Tesla's coming back because it looks like Elon is getting his share stake that he wanted, which is probably deserved. I mean, let's be real. Tesla made the board members rich. He made all the shareholders rich. Why not try and give the guy some stock options and rebuild back his 20% stake that he wants? If we expect this to be a $1 trillion industry, let's see if he can double down and do what he did in the past yet again into the future. So, I mean, he's got about 20.5% as of a recent SEC filing, whereas, you know, back in May of 2023, he only had 13%, largely undiscussed in the broader media. I find that very interesting, but it seems to be what is propelling Tesla stock. Now, don't get me wrong. I still think Tesla is an expensive company. I think it's more or less deserved to be trading in the $100 to $200 range, as we are not expecting any real revenue growth in a substantial manner this year. It's likely that on earnings, just like every earnings prior, the stock is going to continue to drop, but I'm thinking that is setting up a long-term buying opportunity because I'm buying it for the future AI and robotics, self-driving. You know, I still think they're going to dominate with, as you know, the electric trucks scale, the Cybertruck, as the fleet continues to grow with the cheaper model they're expecting to launch in 2025. I think 2025 will be the new growth vector. So I'm using this year as a year to accumulate shares. And hopefully the stock continues to pull back because I want to buy the dips, right? So that's where the TFSA sits. I haven't been adding too much money to it yet. In the RRSP side, I also haven't contributed to this yet. Maybe I will. Once I figure out what I can contribute after my taxes get finalized come March. But for now, this is just kind of the idle account for where I collect the dividend companies that are the lower half of the S&P 500. And this is just going to sit idly reinvesting the dividends. I don't even look at this account that much. What I am doing a lot of right now is playing around in the corporate account. I am selling my Google shares out of my corporation to transfer them over to my tax-free savings account in my personal name. There's a dilemma in a corporate account with investing, and that is that any capital gains that are considered passive income or dividends that are held for long periods of time, it's going to get taxed at a 50% rate, which means you lose half of the capital gains, half of the dividends, because the government's like, hey, we're giving you so many tax breaks already, we can't let you make passive income that's cheaper in a corporation. But, however, if you pay that money out to your employees or you pay them out as dividends to shareholders, guess what? We're going to completely waive any tax you'd have to pay on them. So I have about $39,000 that my corporation owes me tax-free. However, that is not going to be calculated as paid income. It's just what my corporation owes me. So I can't sell these stocks, pay them out to myself, and put them in my TFSA to perpetuate tax-free income. So I'm stuck in this dilemma where I looked at my Google shares and I was flat on them this week. And I said, you know what? I'll sell these. That way I don't have to pay any tax on them. And I'll transfer it over tax-free to my personal name. And that way I can start rebuilding the TFSA. And in the meantime, I'm going to leave my S&P 500 position here and not touch it in perpetuity until in the future when I'm in a lower tax bracket, I can slowly start taking gains and pay them out to myself as employed income and just kind of pay less tax on it, right? So taking a look at the broader view of the market, continuing on the AI discussions, if you haven't seen Sam Altman, he's been posting the new generative AI stuff that they have been able to generate from video just through word prompts. 2 golden retrievers podcasting on the top of a mountain, crapped out of an AI generated tool is absolutely mind-boggling. So he's been taking suggestions and posting just a slew of really intriguing videos. And this is kind of uncanny because some of these videos I've watched, you can notice some finer details. Marquez Brownlee, covered this beautifully. But honestly, for the scale and the scope of how beautiful these generated videos are, you get the idea that a lot of jobs are going to be replaced in the future. And it is happening quick. It is happening now. I've talked about this on my last live stream. This is happening so fast that if you go to school to get educated in video editing, accounting, I'm seeing AI accounting software now. I mean, in 3 to 4 years, you don't have time to be educated on an industry anymore because it's going to evolve so fast. Your job is going to become obsolete. I think sales is going to be the only job that's really going to matter in the future. And you need to know how to sell this stuff because, my God, it is unbelievable what this is going to do for operational efficiency output. Just maddening stuff, which I still believe we are sitting in a bubble in the realm of chips. Right now, the only bubble that really exists that people are saying, oh, it's justifiable, the growth is there, and I agree. But the growth isn't going to be sustainable on a company like NVIDIA that's trading for $2 trillion at 100 times multiple, because the only thing they're selling is to businesses like Amazon, Microsoft, Google. These companies are buying up these chips by the tens of billions of dollars worth. However, there's going to be some competition coming into play. There's going to be something that happens because inevitably they can't keep up this growth pace at this level. Sure, it can last for a little while, but if it keeps propelling the stock and the stock is continuing to trade at 100 times, the scale of large numbers, it is impossible for this to remain a reality. It is going to be one of those things where you want to short-term swing this, try and take some gains on it and get out because inevitably it's going to burst. I just don't know how high it runs, how long it lasts. And I know a lot of people will sit here and justify it to you, but just like the crypto bull run, NFTs had real, use cases, smart contracts, all this stuff has real implications in the world. But for right now, they're only being used to start testing and scaling these AI algorithms from Microsoft. And I'd rather own Microsoft at a 30 times multiple than NVIDIA, because inevitably Microsoft is going to be the one that's getting subscription-based revenue off these products for the long run. NVIDIA and these super microcomputers are selling the chips. They're like selling the picks to the miners of the gold rush, right? Inevitably, they're going to run out. They're going to hit a brick wall, and the picks are going to change, or they're going to have enough picks to mine what they need to mine, and then we're going to hit a brick wall where these stocks are going to tank. But unbelievable, and congratulations to anybody that caught this trend early, because just year to date, super microcomputers is up 210%, and only just now is taking a rather significant pullback by 11% today, which is the first pullback it's had pretty much since the beginning of the year that was anything significant. So you got to be real careful with what you're doing in the AI realm of things. But man, what a trade to play. And I know some people that did it very successfully. So congratulations. But I'll continue to look at things like Google, Tesla, companies that I think have the potential to benefit from the long run of this rather than taking the short-term hype. But if I was smarter, I should have played into this and recognized what was truly happening when NVIDIA started posting those absolutely absurd numbers. But we're not all geniuses. I'm certainly not, and I'm still going to be 100% transparent on what I'm doing, what I'm buying, and how I'm doing it. And if that is what you'd appreciate, definitely consider subscribing. And I'd love to know what you think in that comment section below.